Welcome to the Week in Review, brought to you by Inverse. Investing makes sense when you learn by doing. Here's a review of the major market events this past week, starting with the U.S. CPI. The February CPI report delivered what markets were expecting. Inflation held steady, showing neither a re-acceleration nor a meaningful cool-down. Markets viewed the report as a steady-as-she-goes print, showing inflation not worsening, but also not cooling. This CPI print paints a picture of an economy that was stabilizing before someone decided to take a massive geopolitical dump. I mean before geopolitical tensions escalated, with headline inflation stuck at 2.4% and core at 2.5%. The Fed remains in a holding pattern, watching to see whether the coming energy spike reignites price pressures. The January personal income and outlays report showed steady income growth, solid consumer spending, and inflation that remains sticky, especially in core categories. Personal consumption expenditures rose by $81.1 billion, but the composition tells the story as inflation-adjusted PCE increased just 0.1%, showing that most of the spending growth came from higher prices rather than higher volumes. In simple terms, you're spending more, not because you want to, but because you have to. It's a steady, unspectacular report, one that gives the Fed no new reason to accelerate rate cuts, especially with core PCE still above 3%. Next on our list was the resumption of the Canada-United States-Mexico agreement negotiations. Canada's chief trade negotiator, Trade Minister Dominic LeBlanc, and Ambassador Mark Wiseman met U.S. Trade Representative Jamieson Greer in Washington. The meeting was described as constructive and substantive, marking a thaw after months of stalled communication. Multiple outlets reported that the Iran-U.S.-Israel conflict and the resulting spike in oil, gas, fertilizer inputs, and potash is expected to influence the tone of the review. Experts say the U.S. may now view Canada as a secure supplier in a destabilized global market, giving Canada more negotiating power than it had even a month ago. However, the U.S. held bilateral preparatory talks with Mexico, without Canada, which raised concerns in Canadian agriculture. The canola sector, which relies heavily on U.S. exports, is watching closely, as the U.S. signals it may pursue bilateral negotiations with each partner separately. And finally, in our ongoing earnings analysis, the year-over-year change in quarterly earnings this week was minus 65%. Well, that's all for the Week in Review. And folks, I'm reminded of what the Buddha said when asked by the king for advice on how to rule. He said, if you don't own your shit will own you.